Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Last week was probably one of the craziest week when it comes to the stock market. A lot has happened, but I was very busy with work related events, so I actually didn't get the chance to even look at my phone and so on. So I think Tuesday onwards I was completely kind of cut off. But that I just seen in the news, I just get notifications here and there what was happening, but I really didn't keep much look into much last week. So what we want to do today is just look at what's happened last week, what has happened to my portfolio, and what we want to do moving forward. Because a lot has happened and people were scared. Some people were not sure why the stock market was down quite a bit. Some people knew what was going on, but didn't know, didn't understand what to make of it. So that's what we're going to do today. If you haven't liked the video, please like the video, subscribe to the channel if you haven't already, and join us on the Discord and the Patreon accounts if you haven't already. We're trying to build a community of like-minded people who inshallah will help each other grow and so on, right? So as you can see, I'm up about 3% or 1,900 generally in my portfolio. Now we've been stuck on the 65,000 for almost up 3 months now, I think, because the markets are very volatile still. But this week was different. This week we started, I think, 67.5. It was a really nice week. I was thinking maybe it's going to go all-time high, 68, blah, blah, blah. And then went down to 65,800. Then it bounced back up. And then right now we're 65,200. I haven't actually added much. I think I bought Unilever, one stock of Unilever, I think. And I bought something else. I can't remember. Just here and there. I think I've got a lot of dividends, so I just used that to buy some shares. And we still got 2,666 pounds left of the ISA account. So next week I'll be buying more. I'll tell you in a second what I'm buying and so on. But yeah, so generally the portfolio, it is what it is. But how do we get to this stage? That's what I want to talk about today, and that's the reason you're here, right? So a company called Silicon Valley Bank Financial Group, basically, that works with startup companies. So this company is based in Silicon Valley. All their customers are, okay, let me show you. So this is their UK based website, okay, and they put us a message now. So if you're one of the customers for this company, basically go and check their website out. So they've got some information in there. But normally they work with a lot of the Silicon Valley startup companies. So these technology companies starting their journey have obviously in 2020 and 2021 and so on, there were so many companies that were going public. Okay, so they were going IPO for the first time, and the stocks were going to the moon. These companies made a lot of money. So what do they do with that money? They give it to this bank, okay, as a deposit. So just put it in their accounts so they can earn maybe some interest or whatever. So they leave it with this bank. Then what does the bank do? Almost every single bank does this more or less the same. But this one has taken a lot of the money they received from, that's a deposit from these startup businesses, and they bought treasury bonds. Let me explain how that works, okay, first before we get to this. So the whole idea of the treasury bonds is either 2 years, 5 years, 10 years, whatever, right? The whole idea is that the bank will basically buy those treasury bonds, and then they will get guaranteed income of 2%, 3%, 4%, 5%, whatever it is that they've actually opted for. Obviously, there are different treasury bonds. So imagine they've opted for the 10-year bond. So the 10 years means, okay, you are locked away for 10 years until it matures, okay? Basically, once it matures, basically you will get that guaranteed 2% of whatever the rate was, okay? Let me now switch to the interest rate. So at the time when this company was doing absolutely amazing, so 2020, 2021, the interest rates were very, very low, okay? So keep that in mind. The treasury bonds were offering 2% at the time, maybe 1%, 2%, and so on. So the bank put the money into those 10-year, 5-year treasury bonds, guaranteed, right? Now, the interest rate, since then, the interest rate slightly went up. So it kept going up and up. As we know, basically the Fed has been raising the interest rates. What happens to the bonds is then the bond yield has to come down when basically the rate go up and the interest rates go up. So it started coming down. So if you were locked away for 10 years and you said for 10 years, I'm going to wait and I'm going to get that guaranteed 2%. So what is then happening is the newer issued, okay, so obviously the Fed starts issuing new bonds, right? But these new bonds are now 4%, 5%, and you've seen it going up in the last few months, okay? So for example, the 10-year right now is about 3.7. So if you locked 10%, basically 2% for the 10-year treasury about a year or two ago, right now you are losing a lot of money because there's a new and shiny bond that you can buy today for the double that price. So this company is losing money. So then what is happening is, because a lot of the high-flying startup companies have lost a bit of money, they want their money. Some of them want their money back from the bank and say, you know what, let me basically withdraw some of that money and I'm going to use that now for something else. When that happens, what does the bank need to do? They need to go back and sell those treasury bonds so they can pay the customers, because they don't have enough liquidity, obviously money lying around. So they then said, okay, let's go back to the treasury bond and sell it. They're only going to sell it if you don't sell it. If you sell it before maturity, you're selling it for 2%. So you're losing money. So for that reason, the bank starts losing money, and they don't have enough basically money lying around to just pay off these people and wait for the 10-year, right? And that created a panic. So people then realized maybe the bank is not able to give me my money back, and everyone start running to the bank and said, give me my money back. Then what do they need to do? They need to start selling more and more of these things, and the price of the stock went down crazy. So that's basically in a nutshell what's happened. That's basically literally it. So this company received all this deposit, used it to then put it into the treasury bonds at the time for 2%. Interest rates went sky high. Then the treasury bonds, obviously with 2%, the newer ones have been issued with 3%, 4%, as you can see here. So for that reason, the company is losing money, but they don't have enough money to give the customers their money back, at the same time keep that money. So they didn't have enough liquidity lying around. So for that reason, everything is just kind of feels like it's collapsing. So everyone went, basically, even the CEO came out and said, we will be fine if people do not panic. Okay, but who's going to listen to him? Everyone's like, okay, I don't want to lose my money. I want to get my money back. And for that reason, they couldn't handle it. And right now, they've been actually taken over. I think it was yesterday they had to shut them down. Okay, they completely shut them down yesterday. I think it was a big. And what's happened? That had a huge impact of the rest of the banking market. $52 billion worth of the big four, okay, the Citibank, JB Morgan, Wells Fargo, and Bank of America have lost a combined $52 billion. Look at this, how crazy this looks, right? So look at this, how every single bank, whether it's a regional bank or the big boys, they all lost a lot of money just this week. Charles Schwab is down 24% just this week. 11% for Wells Fargo, 11% for Bank of America. JP Morgan was actually the better one. It's about 7% down, right? So all of them have lost a lot of money. And for that reason, when something like this happens, what happens to the rest of the market? It obviously goes down with it, because people think, okay, the world is about to end. Yes, obviously things are down, but the world is not going to end. So everyone start panic selling. For that reason, the whole market went down. So I didn't basically buy anything last week because, like I said, I was very busy. But I'm hoping that the bad news will continue, and I'll tell you why in a second. Not the bad news in terms of, because remember, the bank going down, there's a lot of people, families and so on, who are attached to that. So I feel bad for the people that work for that company. But at the same time, as a long-term investor, okay, I'm going to tell you exactly what I'm doing. It's up to you what you want to do. I'm not a financial advisor. I'm not giving you advice, but this is what I will do. When you look at my portfolio, is only £65,000, right? All of the companies here had nothing to do what's happened with this bank. If the sentiments change and people stop panic selling, which is basically what happened last week, what I'm thinking is, I own companies like SVB Global, right? Just this week, it was down about 6%. That gives me an opportunity to buy more of that company, because what's happened here has nothing to do with this company. And when you look at the trajectory, like in the last whatever year, so if I click here just for the maximum, okay, actually this thing doesn't even do justice. Let me show you in a second. So this is the S&P, the ETF that tracks the S&P 500. When you look at this here, right, since 1997 and so on, the stock market has been going up. Since that time, okay, for the last 20 years, we had three major crashes. We had the crash in 2000s, okay, where the stock market lost, I don't know, 30%, 40% or 6%, and the NASDAQ, whatever it was, okay, because of the tech bubble, whatever. Then we had the 2008, the housing market crash, and then we had the 2020, the COVID situation. After all that, last 20 years, the overall markets are up 708. So since then, let me see if I can find exactly. So around here, let's just start from there up to here. So it's about 250% up since then. So what I'm trying to say to you, if you got time horizon of 10 years, 15 years, 20 years, what's happened just this week should not matter. And what you should be focusing on, finding quality businesses that you either own already or was in your watch list. Okay, talking about watch list, actually I will be doing a video this week to show you my watch list for the next 3 months, which I haven't done yet, so I'll share that with you guys in a second. If you have not joined us on the Patreon, please do that. They will actually definitely help the channel. So if you are a long-term investor and you have been buying stocks that basically last a couple of weeks, a couple of days, congratulations, because that's what you should be doing. If you're a long-term investor, you should ignore the noise. So you'll see this type of headlines. But the most important thing for you and for me is to focus in the long run. And that's what we need to do. Generally, you don't have to worry about what happens today or tomorrow to the fluctuations of the prices of the stocks. It does happen. Okay, that's inevitable. It will happen. These things will happen. Okay, but if the banks are not doing well, it affects everybody else. And for that reason, that's why a lot of the companies were down this week. Okay, I was very surprised to see some of that. Still, I'm not sure. I'm gonna go and find out a bit what's happened with the healthcare companies, because you've got a lot of companies that are down 7%, 6%. So it'll be interesting to find out. I'm still doing a little bit of research to find out what's happening in the different sectors and so on. But generally, it was an absolutely crazy day. A lot of people have made a lot of sales, whatever, like you lost a lot of money. But the most important thing for you, for me, going forward, and again, this is not financial advice, this is what I'm doing. Start of next week, I will be buying S&P Global. Okay, because it's one of the companies now went on red, and I actually like the company. I want to build a good position. So I want to have at least 5% or more of this company. I will be buying more of Qualcomm because it's now down as well. Okay, I'm going to look at any other company that actually I own, and I feel like it's not that 5% yet. Okay, so there's a lot of companies here that have not made the list yet that I probably would want to buy more of next few weeks. So I will be looking at that, and I will share that with you guys when I do the watch list. But this, honestly, you should not be panicking. You shouldn't be worried about anything. Okay, the bank is now completely gone. They just have to deal with it, see what happens. Okay, people have lost money. All these startup companies that were basically high flyers have now probably lost their money. Somehow they get some of their money back, because, by the way, if this impacts you, you live in the UK and you had some money in that account, just go to the Bank of England website. You will find out a little bit of information. And again, you are protected by the FSCS, which the Financial Services Compensation Scheme. Okay, so you are protected up to £85,000, which is basically what the same thing that applies to us with Trading 212 and other financial companies. But if you have a joint account, so you and your spouse, then you are protected up to £170,000. So yeah, go to their website and find out a bit more information. That's if you had money in this company. I don't know if anyone watching this video will have that sort of money in that company, but if you had, then just go to that website, you find out a bit more information. But the morals of the story, people, is think about the long-term future. Find companies that you actually like and focus on your long-term thing, right? There are other stories flying around, and I don't want to get into too much into that. And what I mean by that is there's another company called Silvergate, also going through the same thing. They were basically working with a lot of the crypto companies, or the companies that basically so all the crypto companies basically work with this bank, and it's also going through similar things. So if you own some crypto and you've seen some volatility in crypto, there's probably something to do with this company. So find out a bit more information. Again, I'm not basically promoting crypto or anything like that, but what I'm saying is when it comes to this stock market generally, all right, focus on the long term, inshallah. Don't worry about what the fluctuation of the price is. Look at your portfolio and say, what can I buy more of, inshallah, going forward? That's exactly what I'm going to do, because I still have, like I showed you early, £2,666 to invest before the 7th of April. And that's exactly what I will be doing, inshallah, starting basically beginning of next week, Monday. I hope you enjoyed the video. Subscribe to the channel if you haven't already. Join us on the Discord. Let me know if you have any questions as well. Have a wonderful day, and watch out for the videos that I will be doing for the rest of the week, inshallah. Have a wonderful day. Assalamu Alaikum.